morning, and welcome to episode 275 of Getting Rich. I'm your host, Rich Checkin, president of Asset Strategies International, and today is Wednesday, May 6th, 2026. Today I'm going to take a little bit of a departure. No metals prices, no updates on current events. I want to touch on a subject that I've covered before, but I think I need to cover it again. With the interactions I've had with clients, whether it be at conferences, on our webinars, emails and phone calls, it's clear to me that there's still this misunderstanding about the role that ETFs or mining shares play versus the role that physical gold plays in your portfolio. Again, I've covered this before, but I think I need to cover it again. Let's first take a look at exchange traded funds. Understand, it is not the same as owning physical gold. Primarily, number one, you own no gold. All right, you own shares in an offshore trust whose fund manager's job it is to mimic the price of gold. You don't own any gold. You can't take delivery of any gold. You are simply owning a proxy for the gold price. And my biggest concern here is most people don't pay any attention whatsoever to the terms and conditions, and my God, you need to. Okay, if you own ETFs, precious metals ETFs, and you have not read the terms and conditions, you are taking an incredible risk and you're going into this blind. Read those terms and conditions. The offshore trustees are protected very, very well. You are not. Okay, shifting gears a little bit to mining stocks. Again, the big difference between that and gold is you own no gold. I can't tell you how many times I've asked customers, do you have precious metals in your portfolio? And they said, oh yeah, I've got 5%. I hold, Newmont Mining and other gold miners. And I share the bad news with them that they own no gold whatsoever. What they do own is they own shares in a company whose job it is to profitably mine gold and then to return those profits to shareholders. But you own no gold. Sure, the company controls resources, but that's different from you owning physical gold. And it introduces a lot of other variables into the equation versus just owning gold coins or gold bars directly. You have to worry about the management and the capability of that management team and the experience as well. You have to worry about indigenous personnel, the people surrounding the mine, the locals. Are they on board? Are they going to protest or riot? Are they taken care of by the company to allow good relationships between the two? You have to worry about the infrastructure. Do they have the ability to crush the rock and deliver it to some sort of a transportation hub? Do they have electricity and running water and things of this nature? You have to worry about permitting. You have to worry about environmental concerns and financing. And these are just a few of the variables you have to consider when you own mining stocks. It is conceivable to have the gold price move up and have a mining stock value go down because one or several of these variables are having issues. So in the end, you got to understand whether it be an ETF, and I don't have any problem with owning an ETF in a trading position for various reasons. I don't have any problem. In fact, we love the mining stocks we hold, both personally and professionally. But you got to understand that is not the same as owning physical gold. Physical gold is nobody else's liability. It is all your asset. And it serves the purpose that you are stating that you own it for, which is wealth insurance, the store of purchasing power with high liquidity for a potential financial crisis you hope to never have. That is why you own gold. It is okay to have ETFs and mining shares in your portfolio. Do not conflate that with your allocation to physical precious metals. It is completely different. As always, we'd like you to go ahead and subscribe to our YouTube channel, like us, send us your comments and questions, follow us on social media, take our twice weekly, always something interesting alerts and our once monthly information line newsletter. But in the end, don't ever forget, getting rich starts with keeping what's yours.